Hello investors and future investors, welcome to the channel. For today's video, I will be showing you the power of LEAPS option, and more importantly, I'm going to show you how to use these LEAPS option in order for you to grow a small account portfolio. Now, if at the time you're watching this video, you are currently working a 9 to 5 or you make it around $15 per hour, then my intention is to make this video help you get some supplemental income. So if that does suit your fancy, then welcome to Investment Gains. Let's jump right into it. Welcome back investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, I will be giving you a step-by-step walkthrough of a LEAPS option that can be used if you have a small account portfolio. For today's video, we're going to be featuring none other than BBAI, and that ticker is going to be BBAI. Now, there's only 3 proven ways in order for you to learn and master options, and those ways are going to be to practice, practice, practice. Hence, I will be giving you a step-by-step walkthrough in order for you to be able to follow along with me. And if you so choose, you could go ahead and practice this option strategy with your portfolio. Now, let's go ahead and we're going to jump into the advanced feature right here in order for us to go ahead and open up the chart. We're going to be going to the 1-year outlook right here. And what we're going to be looking for, we're going to be looking for a very strong level of support or resistance in order to help us better choose our strike prices for our options. So we're going to go ahead now and we're going to draw a trend line right here. And we're going to be looking for that established level of support. So if I go ahead and go down, we're going to see what I'm going to be getting for the established level of support is going to be 482, or let's say roughly around $5 mark. Now, the reason why it's a very strong level of support and also resistance is that if you were to follow me left, you're going to see that the share price actually hit this line multiple times, both on the top side and on the bottom side. So the $5 gives us a very strong level of support. Now, if you need even more confirmation, which is not needed, feel free to go ahead and go to the 5-year outlook right here. I'm going to be drawing the exact same trend line in order to get a strong level of support or resistance. So as you can see here, it's like 4.97. Again, for the 5-year outlook, we have a very strong level of support at the $5 level. And if you go all the way to the left, you could see since what year is this, 2021, BBAI has been struggling to break down below $5. Now, when it does get above $5, if you go all the way back to 2025 right here, when it does get below $5, it has a hard time to go ahead and break past it on the upside. So $5 is a very, very strong support level and also very strong resistance level. So let's go ahead back to BBAI now, and we're going to go ahead and get into these option strategies. Now, in order to go ahead and trade options, we're going to go down just a bit and we're going to go to trade BBAI options down to the bottom here in order for us to go ahead and open up our options chain. Now, for those of you that are new to option, all this information down here represents the option chain. And what the option chain does is that it gives us enough information in order for us to make a very informed decision before going ahead and getting into any option contract. Now, speaking of option contract, before I go ahead and show you this option strategy and how you can use it to grow your small account portfolio, I want you to do yourself 2 favors. Favor number 1, always make sure to do your own due diligence before investing. What may work for my portfolio, quite frankly, may not work for yours. Favor number 2 that you want to do yourself, always make sure to have an exit strategy before entering any options trade. That way, if the trade do decide to go tits up, then at least you know how to get out of the trade. And lastly, these videos are for education and entertainment purposes only, and they merely represent what I'm doing with my personal portfolio. So always make sure to do your own due diligence before investing. Now, let's go ahead now, and what we're going to do, we're going to be going to buy, we're going to be going to call, and now we're going to go ahead and choose our expiration date. And the expiration date we're going to be looking for, we're going to go all the way out. Let's go all the way out to January 21st, 2028, and that's going to give us 796 days to expiration, or closer to 800 days to expiration. Now, the reason why I'm going all the way out there is because I already have an exit strategy in mind. I have zero intention of waiting until January 21st, 2028 in order to get out of this contract. Hence, I went all the way out there to choose that. And I'm going to show you the other reasons why I chose that particular strike date. So now we have buy and we have call and then we have our long expiration date. We're going to go ahead and choose our strike price. Now I'm going to get a bit technical here, so bear with me. Now, for choosing the strike price, I'm going to be going what's known as ATM or at the money. So at the money simply means I'm going to be choosing the strike prices that's either going to be very close to the share price. Now, with every share price, there's always going to be two at the money prices. The first at the money is going to be the $7 right here, which is the closest one above the share price. Now, this at the money is going to also be known as OTM, or out of the money. Now, the other at the money strike price we're going to get is going to be the $5 price right here. Now, this $5 strike price right here is going to be known as ITM, or in the money. And that simply means that the strike price is below the current share price. Now, if you guys have any questions about the options terminology I am using for this video, just go ahead and let me know in the comments below. I'm going to respond to all of them to help you better understand these options terminology. The option terminology, they do sound complicated, but believe me, they're quite simple. So just for the purposes of this video, the strike price I'm going to be going with is going to be the $5 strike price, and I'm going to be choosing that below the current share price. The reason why you want to go ahead and use the strike price below the current share price is that it increases the odds in your favor of you winning this trade. Now, with the $5 strike price, I want to bring some things to your attention that's really, really important for this particular option strategy. The number one thing that's very important is going to be the 8.75, but it's only important based on a few circumstances, which I'm going to explain shortly. The other thing that's of key importance, I think this one is the most important, is going to be your delta right here. Your delta here is 0.8285. That is extremely, extremely important for this particular option strategy. Now, with the $5 strike price, a break even of 8.75, and a delta of 0.82, we're going to go ahead and we're going to click into that particular option contract. Now, this option strategy is going to be known as a LEAPS option strategy. LEAPS simply stands for Long-Term Equity Anticipation Security. It is a mouthful, hence we just use the acronym LEAPS. Now, in order for it to be a LEAPS option, it must be 365 days or more, or 1 year or longer. Anything less than that is just going to be known as a long call option. Now that we have a LEAPS option in our portfolio, here is the most important question. How are we going to make money with this LEAPS option? So let me go ahead and try to explain it to you. So first of all, this here, the 875 break even that I'm pretty sure you've heard a lot about, means absolutely nothing. It means nothing if you have zero intention of going all the way out to your expiration date. Remember, I mentioned that I already have an exit strategy in mind. My exit strategy is not to let this contract go anywhere close to expiration. So that being said, that means this break even right here of 8.75 does not affect me much. Also, the reason why the 875 break even, or any break even when you're doing the LEAPS option, is not going to affect you is because the break even changes. And you're going to see that as I go along to explain this video. Now, I did mention that the most important thing for the LEAPS option is going to be the delta of right here of 0.82. The delta is of paramount importance because that tells you how you make your money and when you make your money. So I'm going to go ahead, I'm going to open up this here, which is going to be the Greeks, or what's known as the secondary option chain. Now, let me show you how your delta is going to help you make money with this particular option contract. So in order for us to have this option contract, we're going to have to pay for it because this is a buy option contract. So the amount we're going to have to pay for it is going to be $3.85. That is in the option world. $3.85, when you translate that into the real world, that's going to cost you $385. The reason it's going to cost you $385 is because each option contract does contain 100 shares. So if you were to multiply your $385 that you have to pay by 100, that's going to give you $385. Now, this is known as a defined risk option strategy, meaning if this trade goes absolutely tits up, the only amount you could lose is the amount that you invested, which is going to be $385. You cannot lose any more. That is one reason why I absolutely like the LEAPS options. By the way, for those of you new to this channel, this is one of my favorite option strategies that I practice actively in my account portfolio. So now that we paid $3.85 for this, or $385, now I'm going to show you how to make money. So when you bought this LEAPS option, the current share price was $6.16. So if tomorrow this share price moves from $6.16 to $7.16, then this price here that you paid for the option is going to go up as well. But how much is it going to go up? Well, here's the simple answer. This price here is going to go up simple by your delta. So now your 385 is going to go up to 385 plus your 0.82 right here. So let's do the math. 3.85 plus 0.82. So the new price of this option, if the share price goes up by $7, is going to be $4.67. Hence, again, you do not need your break even. The other thing you want to pay attention to is what's going to be known as your theta. So this here is theta. Theta simply means time. So because this is a buy option, theta is against you. Whenever you're doing buy option strategies, time works against you. Hence, on this channel, I always promote selling options because that way theta changes and theta becomes your friend. So now we have done delta and we have done theta. The last one that you need to know is just the gamma. And again, it is not important. So once again, we're going to go back to our example of the share price going up by $1. So the share price moves from $6 and it goes to $7. Your option premium, or the amount you paid for this, is going to go up 385 plus your delta. And then whenever your delta goes up, your new delta is going to be added to your gamma. So let me just make it simple. I don't want to confuse you. So the share price goes up by $1. This here goes up by 3.85 plus your delta. Your new delta right now is not going to be 80.82 anymore. It's now going to be 0.82 plus 0.02. So your new delta is going to be 0.84. And that's just how gamma works. So let's get back to it. So when you decide to go ahead and do this long-term option strategy in your accounts portfolio, then you're going to be making money. Now, let me show you again how you make the money by using a graph. So if you follow me down here to this graph right here, now as I go up with my cursor, I want you to look at the expected profit and loss right here. As I go up, you can see the expected profit and loss goes up as well. So if the share price does go up to $9.75, then you're going to be able to make $93 on this option contract. The reason why I chose BBAI as a good representation for making this video is because I know that the share price trades between $5 and also $9 for the last year or so. So by getting to $9, it's not something very far-fetched. Now, to get to $9, 2 years from now, that is not far-fetched either. So this is a very low risk option strategy, especially for my option standards. And as you keep going up, you make as much money as the share price goes up. So if the share price goes up to, as you can see here, $10.50, then you're going to be making around $164. Now, once again, I did mention, when I go ahead and do these option strategies, I have zero intention of waiting until the expiration to get out of the contract. So for instance, if the next day this share price goes up to $7 and I'm already up on my contract around 82, then I will consider very strongly whether I should close out this option strategy and lock in my $82. The reason for that is that the market is unpredictable. No one knows what the market is going to do. So if you do have some profit on the table, there's nothing wrong with locking in those gains. On the other hand, if you think that the bull market is going to continue for a very long time, then feel free to go ahead and keep this option in your contract. What I like to do, I like to close out my contract whenever I'm up, especially a 20% gain of $82. I would go ahead and close out this contract. And what I'm going to do, I'm going to go ahead and open up a different contract. I always like to lock in my investment gains. Hence, the name of the channel is Investment Gains. So investors and future investors, there you have it. The LEAPS option strategy is a very powerful option strategy in order for you to go ahead and grow a small accounts portfolio. When you go ahead and do LEAPS option strategy, always make sure you want to do LEAPS option on a very good stock, or if you can't find a very good stock, you're going to need to choose one that's very volatile. When trading options, you need volatility in order to get some decent premium. So the volatility for this particular option is 104 right here. You see implied volatility, or what's known in the option world as IV, is 104. Now, 104 IV is very, very good IV. So let me just give you some information to work with. Any IV of 0 to 50% tells you that the stock that you're trading is very low risk and the share price is not going to fluctuate much to the top side or the bottom side because it's very low IV. Now, any IV of 50% to 100% tells you that that's very medium IV, that's decent IV. So the reason why it's decent IV is that the share price will fluctuate, but it won't fluctuate that much where you have to be scared of doing any option contract. So any IV between 50% and 100% is my perfect IV whenever I'm trading options. Now, the other extreme is any IV above 100%. So above 100% all the way up, it tells you that that stock is extremely volatile and the price could have swings at any point in time. So BBAI is just right around that 100 IV, so I'm comfortable with that. So once again, investors and future investors, the LEAPS option strategy is a perfect option strategy to help you grow a small accounts portfolio. You need to go ahead and choose an option strike date that's going to be more than a year. That qualifies it to be an option strategy. When getting into an option strategy, always make sure you have your exit strategy in mind. My exit strategy is always going to be whenever I have a decent level of return, I consider strongly closing out the option strategy. Depends on what the market is giving on that particular time. And the next thing you want to do is also make sure that if you are going to go ahead and lock in your options contract and you're going to get back into another contract, just make sure the share price is at something decent where you know the odds are always going to be in your favor. And once again, the options terminology that I did use in today's video, if you don't know what they are, then go ahead and let me know in the comments below. Now, for those of you who had made it to the end of the video, hopefully you guys learned something and hopefully you guys can take this option strategy and probably implement it in your options portfolio. Remember, don't focus too much on the stock, focus on the option strategy. If you guys were to take these option strategies and put it into your portfolio and start helping you learn options and grow a small account portfolio, I'm of the belief that 5 years from now, you guys should be able to leave your regular 9 to 5 and start generating income from options trading. Now, the whole purpose of me doing all this free content and putting out all these videos out there is because I'm trying to help as many people as I possibly can start generating income from options trading. I too used to be in a situation where I had a 9 to 5 and I did not know where my next salary is going to come from if I were to get terminated from my job right away. And that led me to options trading. And so far, it has worked out good for me. So, if there's anyone out there you know struggling to grow a small account portfolio and you think that this video could help them, then the right thing to do is to go ahead and share this video with them. Together, let's try to help as many as we possibly can start generating income from options trading. Now, until the next video, keep pushing your investments.